Let's talk about a sound every trader knows. The opening bell. It's supposed to be the starting gun for a day of ambition, of growth, of new companies hitting the big stage. But for London, that bell is starting to sound hollow. It's ringing in a room that's getting emptier. And there's one brutal bottom line fact that proves it. For the first time in modern history, London has vanished from the world's top 20 list of places for a major corporation to go public. You know, an IPO, just stop and think about what that really means. A brand new high-potential company is looking for a global launchpad, and London isn't even making the shortlist anymore. The capital that's supposed to be flooding in to create the next generation of titans, that river of money has dried up by almost 70% in a single year. You don't need a degree in economics to see the writing on the wall. If you're a founder dreaming of becoming the next household name, your sights are not set on London. It's like the city is hosting the world's most important career fair, but none of the exciting new companies are showing up. That's how you starve your own future. This is way more than just a bad week on the stock exchange. This is a warning light flashing on the dashboard, signaling that the entire machine that builds future wealth is grinding to a halt. So where did all that momentum, all that cash disappear to? To get to the bottom of this, we have to talk about Brexit. But for a moment, let's strip away all the political noise. We're not talking about headlines or talking points. We are talking about the physical movement of people and money, the cold, hard cost. After the Brexit vote, the entire rulebook was thrown out. To continue operating inside the massive European single market without friction, financial firms had to get a new address inside the EU. And so without a lot of fanfare, they quietly and surgically relocated. We are talking about more than 440 major banks, insurance giants and investment firms. They carved out key pieces of their businesses, moved their legal headquarters and walked away. And they took over $1 trillion in assets with them to new command centres in Dublin, Paris, Frankfurt and Amsterdam. Thousands of six-figure jobs vanished along with them. And here's the most critical part: this was not a temporary adjustment. This was a permanent redrawing of the financial map of Europe. London didn't just have a few clients leave. It was forced to watch as a completely new financial network was built right across the English Channel, a network connecting Paris to Frankfurt to Amsterdam, specifically designed to cut London out of the loop. That $1 trillion departure wasn't a political statement, it was the new financial reality. So we've seen the companies and the cash head for the exits. Now let's talk about the people, specifically the people with the most money who have the freedom to live anywhere in the world. Last year, data showed that the United Kingdom suffered the largest net exodus of millionaires of any country on Earth. Thousands of super wealthy individuals are choosing to plant their flag somewhere else. But this is more than just a tabloid story about the rich packing their bags. You need to see this as a canary in a coal mine. Ask yourself this: if you had $10 million or $100 million, where would you park your wealth? Where would you build your life to get the ultimate combination of security, lifestyle, and a tax bill that doesn't feel like a penalty? These people aren't just moving, they are moving entire fortunes, investment portfolios, and all the economic firepower that comes with them. Sure, they might be looking for sunny weather, but more importantly, they are seeking out countries with predictable, friendly tax laws for the global elite, places like Italy, Portugal, or the United Arab Emirates. They're casting their vote with their passports and their wire transfers, telling the world where they believe the future is brightest. When the people who can literally live anywhere on the planet start choosing not to live in London, it's a massive vote of no confidence. And then came the knockout punches, the homegrown champions leaving the nest. And we're not talking about some obscure little companies here. We're talking about Britain's own success stories, companies born and raised in the UK that took one look at the global arena and decided London was no longer their best path to victory. Take a company like Wise, a fintech giant that exploded out of London. In 2024, it made the call to move its primary stock listing to New York. And this is a playbook we are seeing more and more of the big players run. They know they can command a much higher valuation, attract more heavyweight investors, and generate way more buzz in the US markets. Think about what that does to the morale of a place. For any ambitious tech founder in London right now, the road to becoming a billion-dollar company seems to point west straight across the Atlantic. The message being sent is loud and clear. To be a real global player, you can't stay home. London is now stuck trying to recruit the next big thing from overseas while watching the champions it already created walk right out the front door. This is a fight for its very identity. And right now, London is failing to sell a compelling vision to its own best and brightest minds. So if London's launchpad is busted and its star players are leaving, where are they headed? For the biggest companies with the boldest ambitions, the answer is increasingly the United States and more specifically Wall Street. The reason why can be summed up in one word: scale. The US financial markets represent the deepest, most liquid pool of capital on the planet. Think about it like this. If you're a company that needs to raise $1 billion, Do you go fishing in the neighborhood pond, or do you head out to the ocean? The American market is that ocean. It's overflowing with a massive number of giant investment funds, pension funds, and millions of everyday retail investors. This massive scale creates what Wall Street analysts call a liquidity premium. In plain English, it means a company's stock is often worth more in New York simply because there's an almost infinite number of buyers and sellers. That translates to a higher stock price, which makes founders and early backers wealthier and gives the company itself a much bigger war chest. For any CEO weighing their options on where to go public, it's pretty much a no-brainer. It is a financial inevitability. But this isn't just a story about America dominating. Europe, which had been losing business to London for decades, spotted an opening and went for the jugular. This didn't happen by chance. It was a methodical and strategic fight back. As soon as Brexit happened, European hubs like Paris, Amsterdam, and Frankfurt didn't just wait for businesses to knock on their door. They aggressively rolled out the welcome mat. They simplified regulations, offered attractive tax incentives, and made their pitch to banks and trading firms crystal clear: move your business here and we will make it seamless for you. And it absolutely worked. Huge volumes of stock trades priced in euros, which were once handled in London, are now legally required to happen inside the EU. The big banks followed suit, relocating thousands of employees and trillions in assets. The European Union then set a hard deadline to pull the clearing of euro derivatives, a massively profitable part of the market, back onto the continent. This is the bottom line. Europe is not just picking up London's scraps. It is systematically reclaiming the financial power it had lost. It is building a competing network from the ground up. And it's doing this by snatching the most lucrative slices of the financial pie right out from under London's nose. This global power dynamic is no longer just a Western narrative. As the world's economic centre of gravity shifts eastward, the epicenters of finance are naturally following. This is where hubs like Singapore and Hong Kong enter the picture. Their playbook isn't about aggressively muscling in on London's turf. It's about shrewdly positioning themselves as the new safe harbour, the neutral ground for a world that's pulling apart at the seams. These cities have crafted an incredibly powerful appeal. Rock-solid political stability, dependable legal frameworks built on British common law, and some of the most business-forward policies on the planet. They're not pitching themselves as a replacement for London or New York, but as the ideal, unshakable link between the financial worlds of the East and West. For a billionaire in Indonesia, a tech visionary in India, or a family office out of mainland China looking for one secure global base to manage their assets, these Asian hubs are now the absolute no-brainer. They are perfectly positioned to hoover up the tidal wave of new money being generated in the fastest-growing region in the world. They don't need to take London on in a direct showdown. They're winning by making themselves the indispensable home base for the capital of the next century. In the global sprint to attract money, London got tangled up in its own red tape. While rival cities across Europe and the Gulf were offering sleek, simple tax incentives and express lane visas, the UK was mired in a convoluted system. Taxes on investments were just plain higher, and debates over reforms dragged on at a snail's pace. The world's financial elite, who have the freedom to operate from anywhere, simply packed up and went where the regulations were cleaner and the tax burden was lighter. In a world this fiercely competitive, London's old complicated way of operating became a massive handicap. And maybe the most revealing sign of a city's future is how it handles the next big thing. And when it comes to that, London has a massive blind spot. The city is an absolute engine for birthing tech startups. Its universities and venture capital scene are top tier. But when those startups are ready to scale up and become global titans, they increasingly find themselves forced to leave. This is what the insiders call the funding gap. London's stock market has always been incredible at valuing the old guard, the banks, the miners, the oil companies, but it has consistently struggled to understand and correctly price the future. We're talking about companies built on software, data, and intellectual property. The investors with the truly deep pockets and the hunger for huge long-term bets on tech are overwhelmingly located in the United States. This creates a predictable pattern. A brilliant idea is born in London and gets its early seed money there. But when it's time for that multi-billion-dollar public debut, its founders are booking a flight to New York to ring the bell at the Nasdaq. London is the nursery that grows the saplings, but misses out on owning the massive world-dominating trees. It's left with an economy anchored to the past, while the industries of tomorrow list their shares somewhere else. So after all of this, the exodus of talent, the rise of rivals, the self-inflicted wounds, where does that leave London? Is the game over? Not really, but the entire game has fundamentally been rewritten. The era of one single undisputed financial capital that rules the world is done. We are now in an age of multiple specialized hubs, each dominating its own niche. London's path forward is not about trying to be the one-stop shop for everyone again. It's about doubling down on what it can still be the absolute best at. It remains a global titan in foreign exchange trading and professional services like law and accounting. It's also making an aggressive push to become the world's hub for green and sustainable finance. Its future is to be a powerful, sophisticated hub within a global network, not to be the sole center of it. The real billion-dollar question is whether it can become the most vital bridge connecting the financial power of the Americas, Europe, and Asia. The crown was not passed down to a single heir. It was carried into fragments, and London now has to figure out how to thrive in this new, far more crowded and competitive arena.